Hello and welcome to Finextra. I'm Thea George and I'm here with Darryl Proctor from Temenos. We're at Sibos 2017 in Toronto and we're talking about real-time payments and liquidity. Darryl, thank you for joining me.
Lovely to be here. Really great Sibos so far.
So, you've a new report that you commissioned with Ovum looking at real-time payments and liquidity. Can you tell us about the key findings?
I can, but before I go into that, why the report? Why did we run the report? Everybody does it for a certain reason. And we did it because we were finding that banks were really battling with building the business case around real-time payments. Banks are looking at it as tactical. They understand that it's tactical to do these things, but there's so much more to it. So we commissioned the report with Ovum, and we said go and have a look at 100 banks and 100 corporates in countries with real-time payments and without real-time payments, and come back with some of your findings. And interestingly, one of the top findings they did come out with was 64% of the corporates said that receiving payments in real time is their top priority within their organization. So what does that mean, receiving payments in their organization? It actually means that the payment itself has to be real-time end-to-end. So let's picture you and I, you're selling me something, I buy that thing and I say, actually, I've paid you now. You want to know that that money's in your account when I put the telephone down. That's receiving the money in real time. And you really need an instant payment capability, but you also need a digital real-time end-to-end system to be able to achieve that level of instant payments.
So now that we know this, how should banks react to the findings? What should they do in response?
It's an interesting question. With this findings, we found that it wasn't just about the real-time payments. Building the business case for real-time payments means making payments go faster, close to real time, but it doesn't add a lot of value. It costs a bank a lot of money to do this, but it's the products and innovations that go around the real-time payments. It's innovating things like virtual accounts. So I think it was 53% of those corporates said that virtual accounts was top of their priority after real-time payments. So that's a really staggering figure. Virtual accounts has been around for a while, but we're hearing it more and more. And again, it's because of the instant capability, the instant availability of those funds that banks and corporates need to be able to manage those accounts a lot better.
So instant payments, obviously one of the hot topics here, but not the only one. There's lots of discussion about open APIs, about artificial intelligence. How do you see these emerging technologies impacting in this space?
Very interesting as well. So real-time payments has a big influence in the market, and we actually signed with MuleSoft as the provider of our API technology. So that allows us to deliver APIs in an open banking environment very quickly. You couple that with some of the innovations around real-time payments, even with things like launching our payments hub in the cloud, which we did a couple of days ago as well, with Microsoft and Azure. It means that the API capability has to be ever present, not only from a retail bank's perspective, because everybody's looking at it from a retail, but specifically from a corporate. Gathering data. And in the report, please go and read the report. In the report, one of the stats is it's really difficult for a corporate to manage their multiple banking relationships. So managing multiple banking relationships is, for the treasurer, a difficult thing because at the moment they don't have access to the data from the banks. Open APIs, open banking allows that data to be transmitted between banks. So if a bank then takes that data from another bank and can successfully integrate it and consolidate it with their own accounts, that means the client uses that bank for more of its business, gains more of the wallet share, and the bank starts being used for more business and, as I said, more revenue.
That's very good. Thank you very much indeed, Darryl.
Thank you very much. It's been lovely to be here. Enjoy the rest of your Sibos.
And thank you for watching.